Hello everyone. Yep, just another video then on this mock question that we are using for our revision pack. All right, it's from the mock 2022 Sole Trader. All right, higher level question one, and we've already worked on the stock in part one of this question here, which was the goods in transit then as well. What we're going to look at next is the delivery vans, and this is quite a popular adjustment that comes up here. The cost of delivery vans is to be written off on a straight line basis over 5 years. All right, usually they give you a percentage, but here now it's just straight line. Okay, a full year's depreciation is to be charged in the year acquisition and none in the year disposal. So that's quite important there, right? I'll be underlining that for myself there anyway. So year acquisition and none of the year disposal. All right, delivery vans have a 10% scrap value at the of the original cost. Okay, what that really means is that you won't be really depreciating 100% of these vans, delivery vans. Because there's a 10% scrap value, we're only going to be depreciating 90% of them. Okay. Note then, during the year, a delivery van which had cost 40,000 in 2019 was traded in for 15,000 against a new vehicle costing 52,000. Okay, so the cost 40,000 at 2019, that's our disposal. All right, and was traded in for 15,000. What that is there, that's it looks like that's our allowance then, our trading allowance. Okay, and against a new vehicle costing 52,000. So that's our addition. All right. The check for the net amount of this transaction was entered in the bank account, but was incorrectly treated as a purchase of trading stock. Now that's quite a familiar little adjustment we have to do there. Basically, what's kind of happened here is this treatment or this addition of the new van has been treated as purchases, right? So that has been removed from there, and it's the net amount. This is the only entry made in respect to this transaction. So really, the mistake here about the additional van being put into purchases is the only transaction that's actually happened here. Okay, so the first thing you have to do is a few little steps in this, right? So we'll just get a piece of paper here, right? So what I'm going to do first of all, just again, it's part two that we're working on. All right, I'm just going to call this vans. Okay, and the first thing I'm going to do is find, right? Take this a step one then. Okay, so find net amount. I don't know whether it was a check or something like that, or some kind of transaction, right? Net amount of check, we'll say, right? That was used to buy this new van. Okay, so what we'll do is first of all find out what the new van cost. So new van cost, and it's telling us in the question there, it cost 52,000. Okay. There's an allowance, so less the allowance, the trading allowance, and that was 15,000. Okay, so just take those two figures away from each other, and you're left with 37,000. All right, so there's your net check or net transaction. All right, now what we need to do, all right, is that 37,000. Take this out of purchases, right? Take out of purchases. Okay. Now, just below that, then, right? We have a purchase account already done up from the previous adjustment, right? So basically, this is what we have in purchases then. Okay, so you drop a purchase account. The trial balance figure was 626,300. Okay, we had the goods in transit that we've already dealt with in part one. Okay, so what you're going to do, purchase is just an expense account. Okay, now you're taking this 37,000 because this doesn't belong in purchases. All right, this 37,000. This is actually part of the new van cost. All right, so what we need to do is you're going to credit the purchases 37,000. Okay, so you're removing it from purchase basically. Okay, and just underneath that, then underneath your purchase account, right, draw up a van account. Again, give yourself about 4 lines, right? 4 or 5 lines. Vans, right? Delivery vans, whatever it is. Okay. Now, this is just an asset. So on our trial balance, then, what we have, just look at the question here. What we have in the trial balance is 130,000, right? The trial balance, and then what you can do is purchases. So debit the vans, the 37,000, the net amount that was paid for the new van. So there's basically your first step in that question. We got to remove the purchases. The 37,000 net amount out of the purchase account. All right, and debit your van account. But of course, you're going to have to find the net amount first. Okay. The second part of this question, then, what you need to do is, because there's no record of this, right? That they haven't accounted for this. Is a profit and loss on disposal of the old van. Right, so profit or loss on old van disposal. Okay. Now you can do the same working all the time here. So first of all, what we need to do is the old van cost. And in the question that tells us the old van cost 40,000 in 2019. So 40,000. Okay. Depreciation and net book value. Right, they're the things we also need. All right. Now we're going to do a little work in here then. All right. We need to find out the depreciation on the old van. Now you need the depreciation because if you're getting rid of an asset, you also get rid of any depreciation associated with that asset. Okay. So what I'm going to do, I'm just going to come down here and we'll just do a little working. Right. Old van depreciation. Right, there's abbreviated there. Now the only thing we need to make note of is it's written off. So written off over 5 years. That's what they're telling us in the question there. Okay, so I just made a little note of that. There's also something else here, which is there's a 10% scrap value. All right, on the old van at the end of its life. So how you do this then? Because it's 10% scrap value, you're not depreciating the whole asset. You're really depreciating 90% of it. All right, so it'd be 100 minus 10, right? Which means you're only depreciating 95 of it because it will have a scrap value of 10% at the end of its life. So how you depreciate it then? So therefore, it's going to be 40,000. All right, multiplied by 90%. Okay, that will give you 36,000. All right. Now it's over 5 years, so it'll be 36,000 divided by 5 years, and that will give you 7,200, right? Per year, basically. All right. So now we're doing the year end 2021. All right. So usually, what you do is to work out how you have to work out how many months or years to have it, but they're kind of using years in this one. All right. So they have the van for 2019, right, and 2020 and 21. But the thing to make a note here is, right, they're telling us that a full year's depreciation is to be charged in the year of acquisition and none in the year of disposal, right? So that means, okay, they bought it in 2019, so there's depreciation that year. They have it for all of 2020, there's depreciation that year. They do have it in 2021, but of course we don't depreciate in the last year of disposal. So that means we've only got these 2 years. We've got 2019 and 2020. So your depreciation then is going to be 2 years. So it'll be 7,200 multiplied by 2 years, which will give you 14,400. Now that's your total depreciation then on the old van. Alright, so come down back to this little work in here. So it'll be minus 14,400. Okay, so your net book value is going to be 25,600. Okay, now taking account of the allowance, alright, which is 15,000. Okay, so take those two figures away from each other, and you're left with a figure of 10,600. Right, now, how do you know what you're looking at here, whether this is a profit or a loss? Just remember, this is what they got for it, 15, but they think, or the sole trader in this case thinks that this van is worth 25,600. Now, it might be overvaluing it or under depreciating it, but what's kind of happened here is this is a loss on disposal because they're only getting this 15,000 for it, but they think it's worth this. So that's a loss on disposal. Alright. And that will go to the P&L account. Alright. You can put that in selling distribution, maybe, expenses in the P&L account. Okay. Now, how do you know you're right? I suppose what we've kind of normally done is draw up a little disposal account. Alright, so that's what you could do here actually, because we're going to have to remove the old van and any depreciation associated with the old van out of the accounts. Alright, so what we can do next here then, right, we're going to just draw up a disposal account. Alright, so we're still on the vans here. Again, give yourself about 4 lines. Okay. Now the first thing I would do is let's get rid of the old van out of the accounts first. Alright. Now it's always going to be the cost value. Alright. So the vans, I'm just going to maybe put this in a different colour. You're going to reduce the vans, so disposal account. And it's 40,000. Right, that's what it cost. Okay, you always get rid of assets at cost. So go to your disposal account. I'm just going to call this maybe old van. And 40,000. So you see what you're doing there now, right? You're crediting the vans account, right? 40,000, but you're debiting the disposal account down with the same amount. Now, the next thing to do is, of course, you're getting rid of an asset, and you're also getting rid of any depreciation associated with that asset. So the next thing is to do that then, get rid of any depreciation. So what we need, another account we need to draw up then, is the accumulated depreciation account for the vans. Alright, so vans, just going to abbreviate here again. Now this is a liability account. Alright, now the first thing to do is maybe we'll get our opening figure there. Alright, in the accumulated depreciation. And do we have, well, we don't have it, we could easily find out what it is actually. Okay, it's delivery vans cost 130,000 and we have net book value here of 67. So if you just take away the cost from the net book value, that will give you the accumulated depreciation. And the accumulated depreciation in this case then will be 63,000. Alright. Now, as I said, we're getting rid of this, the depreciation on this account then. Okay, so we're going to reduce the accumulated depreciation account here. So I'm just going to write disposal, and it's 14,400 as we had our little work in there. Okay, that's the depreciation we're writing off. Alright, so debit your accumulated depreciation account and then credit your disposal account. All right, so vans depreciation 14,400. All right. The other thing we need to take into account here, they did get a trade-in allowance. All right, 15,000 for the old van. Now, what you do is debit the van account, right, to 15,000. Okay. Now, what you should see straight away, right, is the 37 and the 15. If you add those two figures together, you come up with the 52,000, which is exactly the cost of the new van. All right. So debit the van account 15,000 and credit your disposal account, right, with the same amount. So I'm just going to call this the allowance then. All right. 15,000. Okay. Now, what should happen? What you could do now, actually, right? We could close off the van account because there's nothing else there now for it. Okay. So I just will tidy this up a little bit. All these added together is 182,000. So that's our balance. Carry down, that will give you 142,000. So balance 142. Okay, now that's our, we can use that for our fixed assets. Okay, for our balance sheet. So there's our van account done. Alright. You can also close off then to the disposal account. Okay. So just get in the habit of skipping a line here. Alright, obviously the 40,000 is the bigger figure here. Okay. And what you should end up with then, right, if we take 40,000 minus 14,400 minus the 15,000, okay, we're left with our figure, right, of 10,600. Okay. Now that should match the workings that we have here. All right, 10,600, and it does. Okay, and we've already worked out that's a loss. All right, but say if you were confused and you'd forgotten, or your mind is drawing a blank of what this actually is, whether it's a profit or loss. What I usually get students to do is kind of just roughly just draw a P&L account. All right, and what you can do is, see, the other side, this is always going to go to the P&L, right? So if your credit and disposal account, if we have in this case 10,600, the other side of it's going here. All right, but we kind of know now from experience that anything on the debit side here is going to be an expense on the P&L on the debit side, okay? And anything on the credit side is income, right? So if it, like in this case here then, because it's on the credit side disposal account, it goes on the debit side of P&L, you know straight away now, sure, this has to be a loss then because it's an expense. It was, of course, if it was on the credit side, or sorry, on the debit side disposal account, it would go on the credit side of P&L, and that, then you'd be looking at a profit. All right, so that's how you can kind of make a little bit more sense of it there for yourself. All right. The final thing I suppose we need to work out then is depreciation for the year. All right. So maybe that's the last little step then that we need. All right. So because we want to tidy up then the van's accumulated depreciation account. So maybe this, we'll call this step 3. All right. So vans depreciation for we're doing the year end 2021, aren't we? Okay, so for 2021. All right. Now, again, so what we'll do here then, right, is there's a couple of things. We got depreciation on the old van, all right, that we're getting rid of. We have also depreciation of the vans that they do have, and for the new van then as well. All right. So to work this out, just be careful. They're also mentioning scrap value and all that kind of stuff as well. All right. So to work out the depreciation then for 2021, it'll be, what do we have? We have 142,000, don't we, on that, on the van account here. All right. So if we just do it like this, maybe, so 142,000, right, by 90%, and that's going to be all over 5 years. All right. So little working like that. You put that all together, you get 25,560. All right. So there's our first figure there. All right. Depreciation on vans. So what do we have for vans then? We go back to the trial balance here. So vans we've got, 130. 130,000 and net book value is 67. So we got, oh yes, sorry, we have it here actually. Sorry, so in the trial balance we had 63,000, right? So that's our opening depreciation there. All right. So what we need to put in then for a P&L, right? Well, we have our P&L figure here, so this will go to P&L 25,560. All right, so we'll just tidy this up a little bit. Now that will give us 78,560. 78,560. So a balance carried down will be 74,160. All right, and that then is our accumulated depreciation for our balance sheet actually. All right, so we can put that. Just make a note of where you're putting that then, right? Fixed asset in the balance sheet. Okay. And that's it. Really, that's all the workings for the vans. All right. Again, just do it in little steps like this. Might actually help a little bit. All right. But at least we have the purchase fixed up. We have the van account fixed up then as well. Disposal account, we got our loss on disposal, and then at the same time we're fixing up the accumulated depreciation account as well.